All right, a week ago, my next guest says that we are now seeing a new bull market. Now, remember, Sir John Templeton famously quoted, "The bull markets are born out of pessimism." And by the way, there's an abundance of that right now. So let's bring in Strategic Wealth Partner CEO Mark Tepper. All right, Mark. So just wanted the last week. What was it about what you saw that made you feel, okay, a bull market is born?
All right. So first thing, the technicals are actually really strong right now. So you look at two risk-on sectors. You look at industrials. You look at tech specifically. Over 90% of those stocks are above their 50-day moving average. So that typically indicates you're in a bull market. But beyond that, Charles, I mean, I've studied bear markets going back to 1950, and what you see happen is whenever there's a financial crisis. Right. The market tends to bleed out slowly, and then it takes 4 to 5 years to get back to break even. However, whenever there's a policy-influenced bear market, something that's kind of self-inflicted, man-made, whether it's the COVID lockdowns or tariffs, those hemorrhage quickly and they snap back super quickly.
Right, and we saw the V-shaped recovery back then. It's the fastest bear market and the fastest recovery. And to your point, what about, though, you do acknowledge there's some consumer stress out there. Delinquencies up across the board, mortgage, auto loans, credit cards, student loans, obviously, they just came back on. But the bottom line is they're all moving in the wrong direction. Yeah,
so, I mean, if you think about it, you go back to COVID. I mean, a family of 4 got, I think, $12,000 of stimmy checks dropped in their mailboxes during COVID. Right. The issue is you start to ratchet up your lifestyle. And as soon as those stimmy checks stop hitting the mailbox, you have problems. That's why when you look at 90-plus day delinquencies on auto loans, I think it's 4.9% right now. Credit cards are at 12.3%. We're back at 2008, 9, 10 levels. So that is certainly scary, and we got to make sure that doesn't lead to a bigger crisis down the road.
All right, so let's talk about maybe another self-inflicted wound. The big, beautiful bill stalemate, right? I mean, the clock is ticking. Big debate over problems with SALT deductions, also Medicaid cuts. President Trump went down there yesterday, went to on Capitol Hill and said, listen, don't mess with Medicaid. I'm paraphrasing. So what do you make of it?
Well, I mean, look, this is an extension of the Trump tax cuts overall is already baked into the market. Right. So if we continue to see speed bumps, if this thing doesn't get passed sometime soon, you're going to see more volatility in the market, which I'm okay with. I mean, a month and a half ago, whenever it was last time I was on, when the market was low, I mean, look, that was not the time to get more defensive. That was the time to actually rotate out of defensive positions and into more growth names. And I would use any of these pullbacks as opportunities to do so.
If we did start pulling back, though, would you be in a camp that we have to retest the recent low?
No, I do not think we're going to retest the recent low at all.
Let's talk about some of your picks here. Ethan, I know this company, Establishment Labs, I'm not familiar with.
Yeah, so this is about $1 billion company, plastic surgery, med tech, breast augmentation. Their product, Motiva, is best in class. It's the best technology out there. I did a Zoom with the CFO and the chairman of the board about 2 weeks ago. I was actually really surprised to learn that the 2 biggest players in the space, Johnson & Johnson and Allergan, have done no research and development, no product improvement for decades and decades and decades. So the market share is there for the taking. They also have a new procedure they're rolling out, which takes a multi-hour-long procedure with several days of recovery down to a 10-minute in-and-out procedure. You can be on a dinner date later that night. Great stuff they're doing.
All right, you're talking about buying dips. I know you were buying this on a dip. Google. It's interesting because the AI issue was hanging over their heads, and now they've got this new subscription product, $249.99.
It's pricey.
Super user, right? I mean, is that the answer? You feel like, okay, maybe that will erase some of the AI concerns on search?
Well, I mean, it's a cheap stock, right? And so a lot of this is already baked in. But, I mean, when you look at Google overall, search is certainly a potential victim of this AI boom right now. But they're already working on integrating more AI into search. And my take on it, I think with how cheap Google is right now, if you're just trying to search for something quickly, you're still going to go to Google. If you want a more robust response, you're going to go to one of these AI chatbots. We're not there yet. I think Google's going to be more insulated than a lot of people believe.
Great seeing you.
Appreciate it, buddy.
Always.
Likewise.